All right. Well, welcome traders. Welcome to followmetrades.com. This is our special Trade the FOMC announcement live trading room. If you're new, I'm Dean Jenkins, founder of followmetrades.com, and glad to have you here. Make sure you can locate the chat feature in the Zoom webinar platform. Happy to have you type in any questions as we go along. Hey, and Mark is typing in his greetings. Hey, Mark. Hey, Eric. And everybody else. All right, before we jump in, just a quick disclaimer here, right? All trading and investing involves risk. I'm not a financial advisor. I'm not giving financial advice, right? I'm a trader. And so I'm sharing my ideas, and whether you like these ideas or not, or you act on them or don't, it's highly speculative. Only use money you can afford to lose, and use risk control at all times. And I'll cover a guideline for that. But hey, Danny's here, Shiv's here, Sergio, welcome, and everybody else. Okay. So we're here because in about 45 minutes, the Fed is going to make an announcement, and the whole market, is on edge, kind of waiting to see. So we have an unusual condition here, and setting up maybe some unusual opportunities. So let's see if we can take advantage of this. And just a bit of a backdrop, you guys are traders, everybody is here. I think no surprise, right? The market's been going sideways for a while. Last week, we're all seeing it when we go out shopping for stuff and gas and lumber and whatnot, right? Meat. The prices are going up, and last week we got the consumer price index showing a pretty good spike in inflation, and then this week we got the producer price index, which was up at historic level. And so the big question for traders is, and market participants, investors, everybody is the Fed going to raise interest rates, and are they going to taper their bond buying program? And what effect is that going to have on the market ultimately? So there's really two parts. What are they going to say and do, and how will the market react to that? So in terms of trade ideas for me, for this situation, sometimes there can be an advantage in taking a straddle, strangle, taking both sides of the market. You need a really big move to make that pay off, right? Because if you take a straddle, for example, you buy a call, buy a put at the money, one of them's going to lose, and the winner has to be big enough to cover the loss and to give you a profit. I'm not convinced we're going to get that big of a move to make a straddle or a strangle, both sides of the market kind of work out. So I'm going to take one side of the market, and I'll use risk control on that. And it's either going to win or lose. And if it wins, it ought to win big. And if it loses small. And, over time that math works. But what I'd like to do is find out what you guys think. We got a little bit of time here, and we're going to do a couple polls, and then I'll show you guys the results of those polls, okay? So let's start with the very first poll here. And we're going to say, what will the Fed signal? You guys should have some buttons there to vote. And so, your choices here, hey, what's the Fed going to signal? No change. They're going to signal rate hikes and taper down the road, rate hikes and taper now, or a bunch of mumbo jumbo that nobody understands. All right, and I see some of your answers are coming in already. I'll give you guys a minute to get those votes in, and then I'll show the results. It's always kind of fun. Yeah, we got, 2/3 of you already voting, so thanks for playing. Oh, we have a clear winner here. Give it about 30 more seconds, and then I will close the poll, show you the results. It's fascinating. Okay, it looks like the responses are slowing down. All right, that's good. We got well over 3/4 of you. Oh, there's another one voting, so I'm going to end it. and share the results. So the winner, 52%, is no change. Coming in last is rate hikes and taper now. In third place, down the road. And a clear second is mumbo jumbo. So I'm going to go ahead and grab a screenshot of this real quick. Record this. Okay. And give me just a second here. Poll results. So here's our first one. Try to make this fit the screen. Okay. Save that. Slideshow. All right, let's close that. Now let's do our second poll here. And the second poll is going to be, how's the market going to react? So here we go. And launch. Okay, how's the market going to react? Sideways, less than a 0.5% move. Bullish, it's going to go up. Bearish, it's going to go down. All right, results are coming in. Shiv says, mumbo jumbo is always the right answer for the Fed. Oh, it's neck and neck, all three of them. Yeah, and Shiv says, taper now, hikes down the road wasn't one of the choices. Yeah, I didn't want to do, I wanted to keep it simple. All right, you guys are active. And it is neck and neck. All right, again, over 3/4 voted, so thanks. So we'll end that, and I'll share it. And you can see the winner by a nose is bullish, going up. Then sideways, and about a third of the people, just under a third, say down. So let me grab that screenshot. And put it on my slide. Okay, so there we've got our polling results. Now I'm going to stop sharing, close that, close that. Okay, so you should be seeing a PowerPoint slide with the poll results. Is that what you guys see now? I was doing all kinds of stuff here. All right, Danny says yes. Good, thank you. Thank you, Eric. Okay. So if you think the market isn't going to do anything, for me, there's not really a trade, right? Again, straddle strangle isn't going to work. You know, some people might like to take a spread. For me, this is a day trade, right? The announcement's going to come out and you're going to be right or wrong, you know, before the market close. And for me, there's not time, you know, with my trading approach to try and do any kind of a spread or something on this. So, you know, the trades I'm going to show are based on a directional move. So you got to pick a direction, either up or down. And so let's look at the trade ideas. But first, risk control matters, right? So approach these as though they could lose 100% of the capital invested. So only trade what you could lose 100% of. You know, 1% is a reasonable starting point. That'd be $500 if you had a 50K account, you know, or less. I wouldn't go much more. That's my take on things. Right? It's a speculative day trade. So if you are bullish, here are two trade ideas. First is the NASDAQ ETF, the QQQ. Take today's expiration at the money. And right now, the markets, we're 30 minutes away from the announcement. And typically, when the announcement drops, right, about 30 seconds later, the market reacts, if it's going to react. So here's the NASDAQ QQQ. You can see it's a little bit down for the day. It was dropping, it found a little support, right? It probably, isn't going to move much between now and the announcement. The S&P 500, the SPY, still drifting down. It's not down that much, 0.31%. Okay, so I would wait until as close as possible, 5-10 minutes before the announcement, and then take the trade if you are inclined. And what we'll look at here is if you're going to do the QQQ, right? I would use today's expiration because you're not paying for any money. You're going to be out of it before the close of the section, right? And so we just go look, at the money, and that's going to be, so the Qs are at 341.91, right? If you are bullish, right, you take the calls, right? And so they at the money, 341, it's in the money just a little bit, right? And it's $1.86. So using, my 1%, 500 bucks for a 50K account, right? 2 of those is going to be close to 400 bucks. 3 is going to be just under 600. So you kind of have to round it in your mind, which way you think makes sense on that. Okay, but that's how I would approach it. So 5 or 10 minutes before the top of the hour, right? And I'm actually going to do this. So I'm going to, I'll place the trade that I'm taking right in front of y'all. But that's one idea, would be the QQQ long. Okay. Another idea, if you're bullish, would be the TQQQ, which is the 3x bull, right? And they don't have Wednesday expirations, so you'd be taking the Friday. And the advantage is if you think there's going to be some follow through, tomorrow, Friday, you'd have a little bit more time to ride that trade. And the TQQQs. All right. Again, this would be the Friday, the June 18th expiration at the money calls, right? So it's trading at 109 some change. So you take the 109 strike, 274, right? So you could, for the $500 trade, you could do 2 of those. Okay. These are leveraged. You're paying more for them. The IV on this is much higher. This is double. This is 69 IV, right? So what that means is if this goes the wrong way, you might get a bigger drop. So you get a bigger potential reward because it's leveraged, but because it's leveraged, you get a bigger potential percent drop. So you got to figure out which of those is more important to you. The IV on the Qs, here you can see, but just at 60, right? Well, it changed. So it's not. So that's 341 is 58. But that point does apply. Yeah, here's the implied volatility. Yeah, it's about the same. But because of the leverage, you're going to get a bigger drop on the value of this, right, than you do on the other one. But those are the bullish trades. If you think the market's going to go up. What if you think it's going to go down? Yeah, and Mark makes a good point. IV is high. It's even higher than it was earlier, okay? If you're bearish and you think it's going to go down, same choices, QQQ, today's expiration, at the money put. You could do the TQQQ, the leveraged, Friday expiration, at the money put. You could also do the UVXY, the VIX leveraged. It's an inverse. It acts inverse to the market, right? UVXY is a VIX ETF, at the money call, Friday expiration. So the interesting thing about the UVXY trade is that if the market goes sideways or up, it probably isn't going to lose much, right? But if the market goes down, it has the potential to really jump. And you can see where it's sitting at here, right? As the market's been putting in record highs, this thing's drifting down, 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 down. So if the market goes up, this probably isn't going to go down very much. And if the market goes down, this could jump, you name it, 10, 20%. Right? So this is kind of tapering off here. We can kind of zoom in on current price and you can see, right? And you can see also when the market drops, when there's increased volatility, you can get a pretty good pop on it. So you can see today with, this last week, it's been absolutely flat. But when the market does drop a little bit, this thing pops big time, right? Percentage-wise, these are big moves. This thing started, like on this one day, it started at 49 and moved to 61. That's a 20% jump, right? So this could do something like that if the market drops. And again, I think the downside on it's fairly small. So that's an interesting idea, UVXY, if you're bearish. And again, we would take the Friday expiration, which is June 18th, at the money. Here we are, at the money calls, right? So it's at 30.78. We take the 30.50, $1.71 is the ask. So in this case, you could, get 3 of those for your $500 trade, be a little bit over, right? And do pretty good. Maybe. It's all speculative. These are all for me set up as either day trade or nearly day trade, right? Definitely, if I take 3 of this one, right, we get a big pop, I'm going to sell one, right? Wait the rest of the session, sell the second one, and then maybe see about holding the third one for tomorrow at the open. Something like that. So, which trade am I going to take? We got 5 potential symbols. If you're bullish, you got the Qs, TQs. If you're bearish, you got the Qs, TQs, and the VIX, UVXY. I'm taking this one. I'm taking UVXY. That's going to be my trade. I'm bearish. I think the market's going to go down. I could be wrong, and I think that's a good leveraged play with more upside than downside. Right. So I'm going to take 3 of those. And we're at 10:33 Pacific time. So at about 10 till, at 10:50, I'm going to come put my order on, and I will, I'm going to do it in Thinkorswim, and I'll do it right in front of you. And then we will track all those trades through the announcement. So those are the trades. That's the idea. And what I'm going to do is just kind of pause, right? Now we got some dead time. So I'm going to just pause my screen and take a break. And then about 10 till, come back, I'll place my order, and then we'll watch what happens. Sound good? Let me do this. I should have done this to begin with. I think this thing will auto scale. There we go. I'll leave my screen frozen with both things there so you can see them and do this. And that will be 1:50 p.m. Eastern. Happy to answer any questions or comments, respond to any comments you guys have. But so I'm just going to freeze the screen there. I'll go ahead and stop the recording because this would be a big bunch of dead time, and then I'll record. I'll start again, and then yeah, I'm going to send a recording out of the whole thing. So, all right. So we're 3 minutes from the announcement. I took like I said I was going to. I took the UVX Friday expiration calls, 31 strike. Paid 149. Got 3 contracts. We'll see how it goes. Lawrence got 147. You beat us. And again, let me emphasize, if you're considering participating in these trades, be smart, use risk control, only trade the amount you can afford to lose. These are short-term speculative trades, right? Don't bet the farm. That wouldn't be smart. And the market, you can see, is stabilizing, starting to go sideways. Q's on the left, Russell in the middle, S&P 500. Top rows, 10-minute, bottom row, 2-minute. And again, there's quite often a radical spike, seconds after they drop the announcement. That may or may not be the direction it's going to go. So I kind of let that spike happen. Unless it moves me into massive profit, then I'm going to scale one off. In fact, one strategy we can do, John says he's paper trading. Yeah, if this is new to you, that's not a bad idea. So I've got 147. I can create a closing order for one of my contracts at about double what I paid. So I'm going to put in a limit, call it $3. If it spikes to $3, I want an order out there to, that's a day only. I'm going to grab profit on the immediate move. And the tension, you can feel it. Drum roll, says Amy, right? 5, 4, 3, 2, 1. A bunch of digital ink just got released. Boom. Boom. So I'm watching the charts here. I'm sure somebody else has a feed and can tell us what they said. So if you have the bullish side, you may want to, like I said, sometimes there's an initial spike and then it will reverse. But given the size of this move, that was over a 0.5% move in a few seconds, and it looks like it's holding. So if I were holding the long side, I would go ahead and dump it, take my loss. Whoa! And Kevin says they held but raised inflation expectations. Look at that. So I'm in $200 profit on my 3 VIX contracts. That's not so bad. So I got a order out there to close at a limit of 3. What's it doing? Sean says, looks like it's going to reverse. They want to cover. On the 2-minute chart, it is reversing a little bit. Yeah, Danny, I saw that on KGC. We'll get an alert out on that. Yeah, John, I saw that. That was unfortunate. It did not help us. In the swing trading service, we were long on KGC Gold, and they had a fire in one of their mines. We hit our stop, controlled loss. Our other gold trade is doing great, though. I'm going to see if it gets a little bit of follow through. We're sitting in $50 profit. $100, one tick, one blink of the eye, it doubled. I'm going to see what the underlying is doing here, UVXY. There it goes. Yeah, baby. All right. Well, hey, did you guys enjoy this? Was this fun? This is outside of our normal, swing trading deal. This was a short-term speculative day trade, but the conditions were right. Now, why not? Give it a shot, right? Richard, love it. Good. Kevin, great. Amy liked it. Danny liked it. Max liked it. Sergio, there you go. Lawrence, chicken, he sold that too. Oh, Paul liked it, great. But I'm glad I'm not hearing any negative comments. Now, where are we sitting at here? 115 profit. Yeah, James, you're welcome. 25% profit in a few minutes. We got 2 hours left in the session. Looks like we're finding a little support here. And using, my normal swing trading Elliott wave analysis, we could say, given that dramatic move, it's right in the retracement zone, kind of where we would expect it, and then to see a follow through. Dustin sold the puts instead of buying them. Oops. We all have done that, Dustin. We've all done that. Click the wrong button. The key is don't let a little mistake turn into a big mistake. With this retracement, you ought to be able to cover them, right, without too big of a loss. Just wrap that up. That is what I would do. Yeah, there you go. Sergio is asking, what did the Fed say? Somebody posted it earlier. Unchanged. Projects 2 possible rate hikes by the end of 2023 and raised inflation expectations. It's surprising the tolerance they seem to be demonstrating for inflation. The Fed has 2 charters, right, to control inflation and to have full employment. That's what they're supposed to be on top of. So I'm watching this retracement zone very carefully on the SPY, right? This is in the region where after a big move, we expect a retracement and then a continuation, a follow on down. Could take a little bit, but if it does have a continuation, it'll go deeper than the original move, and that's kind of what we're hoping for the short trade. If you're still holding the longs, this may be a good place to dump them. Take a small loss on them and dump them. It could go up. The whole market could turn green at this point, but the probability based on what we got in front of us right now is big impulsive move, correction, another impulsive move down. That's the probability. So this, if I were long, this is where I would dump them if I hadn't already. Sergio, yeah, UVXY is really going to be the opposite of the SPY. So we're looking at something like, here's the big move up. The retracement is where it's at, right? It came down. Now we expect it to go on to new highs as the S&P goes the other way. That's it's just the inverse to the SPY. Hopefully. Well, I think I'm going to wrap up here. So if you're holding the UVXYs like I am, the calls, what we're going to watch is for a follow through up to new highs. If it starts to fail, if the SPY goes above about 423, right, then UVXY is going to come down here, into this 30-50 kind of range, and that's where we would, jump out, call it a failure. If it does, if the SPY continues down, this continues up, as we approach this area here, this 32 area, I'll take profit on one contract, and then I'll just put a trailing stop on the rest, and I'll be out of all these by the end of the day. And if you're holding the QQQ puts or TQQ puts, it's the same thing. Just watch the underlying chart. Those same. And again, if I were on the bullish side, I would be out. Would be out of the trading now. All right. Well, it sounds like everybody enjoyed this. If you are not part of my swing trades service, right? This is an unusual situation. Typically, our trades are swing trades, daily charts, stock and option picks. You are invited to jump in and take a trial. Special offer. You can try my stock and option picks 30 days for $37, and then after that, it's $97 a month, right? 100% money back guarantee, refund on request, no questions asked. $37, give it a try. I'll post the link for you in the chat box. There we go. A lot of the people here are subscribers. And hey, bonus, if you sign up today, I'll include my Ichimoku Cloud course, $247 value. Throw it in as a bonus, right? What do you get? You get the watch list of trades, alerts when we're going to take a new trade, the exact details, entry stop target. Most of them can be traded with shares or options. You get alerts when I make a change, move stop, take profit, close to trade. We have a live trading room Monday through Thursday. You can attend if you like. It's not required. There's a recording and recap available. Wednesday nights, we do a live chat session. You get a one-on-one consultation. I provide some tools for risk management, option trading, and training. Of course, ongoing support and training. So if you like what you saw here, you're not a member of the service, there's a link. Take a trial. Check it out. We'd love to have you participate. And if any of the existing subscribers want to jump in with a endorsement or a testimonial, that would be awesome. Make sure you change the address bar to panelists and attendees so more people than just me see it. Well, thank you, Danny. Oh, here we go. SPY's heading down. UVXY is heading up. 126 profit, 28%. Not so bad, eh? Okay, we're approaching this little consolidation area, approaching the prior high on this UVXY. It's going through it. Here we go. Sean says, keep your shorts open. We talk about the trades, right? Now, if you recall, about 10 minutes ago, I said, based on this move, we expect a retracement into this Fibonacci zone, and then it would continue that original trend. It's like a crystal ball or something, isn't it? It's not magic. It's just, right? It's a simple version of Elliott wave. All right, look at this, $253 or $243 profit. Let me take, I'm going to take one of them off. So I had this $3 limit in case it doubled. I'm going to replace it with the current at the midpoint. So I'm going to make it a 340 limit. It's moving, 240. 240 limit, one of the contracts. Filled. All right, so I locked down some profit on one contract. I'm holding two. Yeah. And I made $100 on that one. That's not bad. Now, it's not going to move straight down. Price does not move in straight lines. It moves in lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So this isn't going to go straight, but the projection based on the history we got in front of us right now is target zone between these green lines down here on the SPY. Q's doing the same thing. Big move down, retracement. So if you're trading the SPY puts and you want a target on the SPY, let me give you that. Okay. Something like 337 to 335 is what it looks like on the Qs. Of course, the TQs are just going to be 3x. Anybody take the TQ puts? Oh, baby. You know, here's when you're doing this live in front of people, it's so fun when it works like this. Of course, it could have gone the other way. I would have lost money in front of y'all, but we would have lost a little. And the potential here is to make a fair amount. I didn't bet the farm, but I am in 60, we'll round that, 64. We're in 65% profit in less than half an hour. That's not a bad day trade, eh? Hey, Mark is here. Mark works with me on our advanced trades, earning trades, day trade signals. I can open your mic, Mark, if there's any commentary you want to offer. Mark's a smart guy. And he took I think he said some kind of synthetic straddle. I think based on what I saw, I think you made some money, eh? Type a chat there if you wanted to say something, Mark. I caught you off guard. You may not have had your microphone. So he said he made some money on UVXY. Are you net positive on the whole thing? So what's our target on UVXY? So far. So we are approaching the target zone, at least based on the initial move here on UVXY. Sergio closed UVXY at 360. What did we get in for? Buck 47, buck 49? More than doubled it. I see. Yeah. Okay, well, I already kind of explained what we're going to do. Like right now, the UVXY, really approach the target zone. Remember, it moves higher highs, higher lows, higher highs, higher, it doesn't go straight. So I'm going to wait for higher highs, get into this target zone. I'll take profit on the second contract and eventually on the third. But yeah, this worked out. This was fun. Okay, going to wrap it up. Hey, thanks everybody for showing up. And once again, if you are a visitor here and you wanted to take that trial with the swing trading service, there is the link. An example, we're short Corning. We got short at this blue line and it's just dropping like a rock. This is really a good thing. All right. Okay. Hey, take care, everybody. Trade safe. Keep the winner big, losers small. And we'll catch you next time down the road. All right. See you then. Bye-bye.